This is the Friday, March 18th, 2016 version of the Market Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Hey, thanks for having me.
We are glad to have you. We're also glad to have all of you watching us here on Market Plus. This is one of those value adds that Market to Market produces, and we like to think of it as a valuable addition to the program. And if you find value in it and you're watching us on your computer, click on that donate button on the top of the screen and help us keep this going on into the future. And with that, we'll go over to Ted Seifried. Ted, cotton market. Didn't get a chance to discuss it on the show.
Right.
Cotton almost unchanged on the week.
Yeah, right.
What are your thoughts here?
Finding a little bit of support. I suppose that's good news. Weather has certainly played into that with all the flooding that we had in Delta. I think, if anything, the unchanged on the week is cotton's way of saying we don't want to lose any more acres, based on weather or anything like that. So we want to keep that incentive in there to get that done. And again, a weather concern there. But going forward, it's difficult for me from a demand point of view to say, hey, cotton has a whole lot of upside potential unless we have some major weather issues. So it's nice to see that we basically tread water. I actually had a little bit higher week here this week. But unless we have continued weather issues, that might not be able to hold. Okay, might not be able to hold.
Next downside target, you'd be looking in the low 50s. Is there another $5 move in cotton?
Yeah, low 50s. Yeah,
okay.
I don't think there's much below that.
Okay.
But yeah, somewhere in the low 50s I think is realistic.
Gotcha. Now, when we wrapped up the program, we were talking pork, and I really wanted to ask you about crude. Mm-hmm. Volatile week, dollars all over the board, crude's all over the board, peaking above 40. Where do you see crude heading in this next week?
I think we could be ready for a pullback here at this point. I think $40 crude starts to get a little bit more expensive. I think above $40, we start seeing more production come online, and that is really not what we need right now. We have big crude stocks. So I think that we'll start, and it's not that the demand won't be there, but I think the supply is big enough that we'll push maybe back down a little bit. I think you're going to see a little bit of a retracement. That being said, I don't know if we need to go see new lows here at this point. But I think somewhere in the $35, maybe between $31 and $36 is somewhat fair value for crude. So I would expect to see it pull back here in the fairly short term. Now that we've got the Fed announcement out of the way and that bullish commodity move with the lower dollar, I think the dollar is going to find some stability here sometime fairly soon. So yeah, I'm looking for a bit of a pullback in crude. And here on Friday, we started higher. We got to new highs for the year. And then ended up closing down on the day. We saw something like that in cattle on Thursday before we were down sharply on Friday. Same thing happened in corn on Thursday. We were down on Friday. So, the setup is there for a bit of a pullback at this point. And again, I think fair value is I think we've overshot that by a little bit.
All right. Now, we do have a number of questions here from our Facebook followers. We've got one from Rodney in Edgar, Wisconsin, and he's curious, how much upside do the cattle markets have? We talked on the program. Where do you see, what's your upside targets? Let's talk live cattle first.
Well, I think we have to shake off this report here from today first. And then we got to see, how we act here early next week. If we can get that technical train rolling again, I think we have a couple more about $4 more upside potential. But again, shaking off this report might be fairly difficult.
Right.
Because again, this was a bearish report. We were expecting a bearish report, but it was more bearish than expected. It's all going to come down to whether we had just started to get the attention of the speculative crowd on the chart, and they like bull markets, they like trending markets that have well-defined trends. We had that. So can we get that back or not is going to be the question going forward.
Okay. Feeder cattle, again, shake this report off, see where it comes. Is it that $3 or $4 upside target?
Yeah, somewhere in that neighborhood. Although this report's going to kind of maybe keep a little bit of a lid on feeder cattle because of that huge placement number that we saw. So I think cattle have maybe a little bit more upside potential than feeders. But again, if we can get that technical crowd going again, that speculative crowd going again, maybe we can resume this uptrend and try to forge a bit higher here at this point.
And the cash feeder index, demand had been strong for physical, and I haven't heard how cash live cattle traded on Friday. I don't know those numbers, but it had been expected to be stronger as we were coming in.
I believe we traded 140.
Okay.
So
$1, $2 above last week.
Yeah, which is great. $2, right? So that certainly helps some strength, but the lower box beef prices we had on Friday. And listen, there are some guys that were hoping to see a 142, 143 trade this week.
Okay.
We didn't see that. A 140 is still a positive number, and it's moving in the right direction, but maybe not as strong as what we had hoped for. So that is cooling off a little bit, and I think that was pre-report. I mean, that's what we were expecting bearish report. So, it's not surprising to me that did cool off a little bit. Now, again, the question is going to be, how do we react to this bearish cattle on feed report? Again, we were expecting it to be bearish, came out more bearish than expected. Does that mean we're going to be down limit again on Monday in feeder cattle? I hope not. If we're not, though, maybe we can get that buying interest back into the market.
All right. Now I want to go to a question. We've got a question from one of our followers on Twitter who is also an analyst on Market to Market. This is Angie Setzer at the Goddess of Grain on Twitter. She is wondering, just because it's that time of year, what are you expecting for acres and stocks here on March 31st? Okay.
So we haven't put together, and I mean collectively, I'm not talking about Zaner Ag Hedge or myself. I'm saying the news agencies, at least at this point, have not put together the average trade guesses. So we will be part of that. We'll put our numbers out there, and I'll tell you those in a second. But my general guess is that we're going to see expectations pretty close to the Ag Forum numbers, Ag Outlook Forum numbers that came from the USDA. I think the trade will be looking for somewhere right around 90 million acres of corn. I think the trade will be looking somewhere right around 83, maybe a little higher than Ag Outlook for soybeans, and I think 51 or so for wheat. As far as I'm concerned, acreage has been a very difficult thing to put your thumb on this year. You've got issues down in the Delta, so you wonder how much of that corn is going to get planted, or if you're going to see a big shift to soybeans. Go further north, and you've got concerns about planting as far as being too wet, but at the same time, with the warmer temperatures, we're wondering if maybe we can get in early and maybe we get extra acreage. If you look at the corn and soybean price relationship, it's much more favorable for corn this year than it was last year. However, you still do have that argument that beans are the cheaper plant to crop to plant, and with bankers being bankers being bankers, they don't have a big interest rate to sit back and collect. So for them taking what they see as big risk on big ag loans with very little return, they're trying to scale back and trying to lower those operating loans as much as they can, or at least look at the fine lines very closely. So you've got sort of the financial aspect versus the profit potential aspect versus the weather issue aspect. When you put all three of those together, it makes it very, very difficult. But our current estimate for corn acreage, we're at 89.3, so just a little bit below Ag Forum. We're at 83.4 for our soybean acres, and we're right at about a 52 for wheat. I think we're going to get back some of those wheat acres, but not necessarily because wheat's terribly profitable, obviously, but I just think that we're looking, I don't know, I think the USDA is expecting too large of a reduction in wheat. I certainly think we're going to reduce wheat acres this year, but I'd be surprised if as much as what the USDA was suggesting.
Stocks-wise, do you have any estimates put together yet?
I'm very curious. So I don't have quarterly grain stocks numbers, specific numbers for you, but I can tell you what I'm thinking. And I'm wondering if feed might be a little bit stronger than what the USDA is currently suggesting. I'm wondering if there's a chance that both corn and wheat stocks come in a little bit lower than what the USDA would right now be suggesting we have. I wonder if feed has been a little bit stronger, keeping the extra 30 pounds or so that we've been averaging this year. I mean, it takes a lot of feed. Plus, you look at the basis across the country, we were expecting it to collapse since last harvest. It really hasn't happened. It has been gaining some steam here recently, too. So, again, I wouldn't be surprised if quarterly grain stocks, the focus is going to be planting intentions.
Right.
I mean, that's what everybody's going to be looking at. But I wouldn't be terribly surprised if quarterly grain stocks steal the show. And maybe something comes in less than expected, and maybe we have something interesting to talk about.
Might get a bullish surprise March 31st.
Be nice.
All right. Well, Ted Seifried, thanks for taking the time to join us this week.
Always my pleasure.
Thanks to all of you for sending in your questions via Facebook and Twitter. We do appreciate it. Tell your friends and be sure to continue sending us questions. We will get expert analysis right to you. Thanks for watching and have a great week.